Welcome to this week's office hours. We did not have it last week because I was back in Texas visiting family and did not have a place to record it. So sorry about that. But anyways, we are here today. So this is done every single Wednesday at 12 p.m. Central Standard Time. This is here so that the Inner Circle members can get their questions answered. We can talk about their options about portfolio and any other thing you need. So if there is a question you guys have, please put it in the chat. I want to make sure your question gets answered. With that said, let's dive into a general market overview. So if we look at the market, man, have things gone crazy. Okay, for most of March, and literally half of April, we had a very slow decline. So we were going into a bearish market. You can see here from our indicator that we slowly drifted out of the green zone into the red zone. Our bearish bots activated; those were doing well. And then Trump started making threats and all the stuff that he does. And now, at the moment, although nothing to my knowledge has been solidified yet with Iran, we have been seeing a very positive move up in the market. And so, with that said, what's going on currently in the market? We are in a bullish trend based on our market indicator, but I do have something to cover here, which is my thoughts. Although we are back in bullish territory, we have moved very quickly and we are approaching the top of the green zone. You can see here, we have moved from here, 6,400 on ES, all the way up to 7,029. So over a 300-point move in just a couple of weeks, which is a very fast move for the market. And now we're getting close to this zone, which tells me that we have been pushing up a little too quickly. There's some space that we need to give back to reconfirm and retest that this is what we're looking for. Now, good news is that we have a resistance point here. This is where the high of the market has previously topped out at, and we're starting to get close there. So we're at a very crucial point this Wednesday, which means that if we can break above the highs that we were having here, then we will continue to see more of a bullish movement. However, we are very overextended, pushing into this move. Today, we've had a very small body candle move, which means that there's a high likelihood we see a pullback. My expectation is that we see a pullback, maybe even a pullback here to 6,800. You can see here, we tested it here and here. So this retesting may mean that we're going to retest it again and go back to this level before shooting higher. But anyways, good news. We're in a bullish trend, but we're not quite out of the weeds yet. And so let's just walk for what's going to happen. Now, overall, you probably had your bearish bots running here. Hopefully, you're able to close out some profits on those bearish bots. If not, they're now at losses. But again, your bearish bot loss should be within the profit of one of your bullish bots. That means if you have a profit from a take profit on one of your bullish bots, it should offset one loss from a bearish bot. So if that's not the case, let's rework your bots together to make sure that works. Otherwise, you should be good because all your bullish bots should all be back in the profit. You should be good to go. Most of you, unless you have a very tight stop loss, as not with the stop loss, you should all be back in profit. Option about portfolio. Again, it's nice to see it come back up. I did have some losers on the put credit spread, but we are going back up. This is an outdated picture. Allocation still the same. 50,000 options bots, 90K in ESCA, and $45,000 in cash for safety. Again, my thoughts we're still transitioning, so we got to see what happens, but overall very bullish. If we look at the overall bots, it should not be a surprise at what bots are on the leaderboard. The top bots are going to be all of our 11X strategies. Again, these are bullish futures strategies. So those are what's ranking consistently here this month so far. We can see here David up about 14,000, Scott up about 10,000, and Dara up about 5,000, close to 6,000. Now, we do have to factor in a lot of this profit is just recovering from losses. So we don't know 100% if this is pure profit, but it is still pretty nice. And so, again, what this looks at is, hey, where the profit and loss was for a certain bot on April 1st compared to where it is now. What is that change? And so we're seeing that we're very dramatic changes here. So people making a lot of money. Again, like I mentioned, could be a lot of recovery, but definitely a lot of profit in there as well. So the 111 strategy, being the ready, steady, retire bot, is definitely crushing. Two people running 112s. Again, this is just an increased leverage form of the 111. So it's the same concept, but you're taking on more risk, but you also get more profit. Hence why The two 112s outperform the 111 because it has higher profit ratios by about 2x. So you can see here, Vera made about 6,000, and these two are close to double it because 112 is double the risk, double the profit. We have a biweekly rainmaker, 112, 111, 111, and then just other things that your strangles that done well. Also, those are the top bots. We also have the daily income bot coming in very strong. Remember, the daily income bot is a 1DT bullish strategy as well. So when we're looking at a shorter time frame, that's also performing quite well. You can see here another ORB bot, a daily income bot. These things are doing just because, again, what's it called that Warren Buffett says, a rising tide raises all boats, right? And so if we have a very strong bullish market, that's really just going to help out everyone. So my thoughts again is the options bot portfolio. We have a bullish bot and a bearish bot, and we should always have both running and ready to go because we never know when the market's going to shift, when it's going to turn, and when we can take advantage. Because if you had your bullish bots turned off and we had this huge spike up, you would have missed out on all these profits. So yeah, that's why it's going there. Anyways, live Q&A. So let's get to your questions. If you have any questions, Tron has raised his hand. Tron, throw your question in the chat. If you want me to, I can even mute you and we can get talk there as well. But anyways, guys, I'm here for you. So please let me know how I can help. Welcome in. It looks like in the group we have Tron, Dale, Maria, Robert. Glad you guys are here. Let me know if there's anything I can do to help clarify, help answer. Overall, very bullish market. Might see a pullback, but I'm really excited saying that we'll probably see a move higher just based on how optimistic the overall market is with what's happening with the situation. Yeah. Anyways, any questions from Tron, Dale, Maria, or Robert? Again, I can fill in space, but I want to make sure that I get to your questions first. I will wait a sec while you guys put in questions. If there are no questions, that's all good. But take a look at the market here. Close this out. Maria said, just want to hear your take. Yeah, okay. Yeah, so if we look at the market here, again, let's look at the high here. From the high that we had about January, we're kind of just consistently downtrended. We went down close to 9-10%. Now, this is the percentage drop of a crash. Okay, what I mean by that is it's typically considered like 10% move in the market as a crash, but typically it's within a certain time frame. I think this time frame is a bit extended. Like typically you see a crash phase, something like this, where it drops that amount in a few days. So this was a slow burn, which really hurt for our option spots because we're playing off time decay, but direction wasn't working in our favor. But again, this is why we just hold through, why we do 90 DTE plus, 120 DTE plus, because it gives us 2 to 3 months, even more, 3 to 4 months to really allow our positions to just work, because we don't know when we're going to have a slow burn like this where we just need to wait for that spike. So by giving us 3 to 4 months to play with, we allow ourselves to sit in the trade, although uncomfortable. Then the market has that recovery. It can typically recover in about 3 months. So we do have to hold those trades for a while. So it is a capital risk, but it's fine. And then we see that spike up and now your bullish spot. So this is just a reminder that, yeah, the slow burn sucks. Remember, it's there. It does happen on occasion. But now that we're back into bullish territory, don't take your foot off the pedal. Ideally, you just have your option spots running, so there's no pedal you have to press because it's just going. But yeah, so now we're back in bullish territory. Again, we're probably going to have some dips here. Why? Because look at this. This is our resistance. So let me pull up a chart here, do a horizontal line at the top right here. You can see here, this is the top the market has reached. This is then known as resistance. And now we're playing into it. Again, if we break, means we close above this level. We can come a bit high, come back down to retest this level and head higher. This is scenario number 1. We can also pull back down, retest here, and then go higher here, which again, this could be a come up, a retest, or just straight through. We don't know. So these are the 2 options, numero uno and numero dos. Again, my idea is we're going to have numero dos. Number 2, we're going to see a pullback here. And again, I purely say this just on the weakness of this candle. This is a very small body candle. When we have a small body candle, it means either the bulls or the bears are in control. And when that happens at a crucial level, like a resistance point like this, signs of a pullback, especially since how far we're overextended, we have gone up in the market from the bottom to now the top 10% in a matter of 2 weeks, which is quite quick for the overall market. So 2 different scenarios. Either way, I think it's going to be bullish long term when we come out of this in a couple of weeks. So again, bullish spots are running. Man, I had a short put bot. I bought those running short puts at another account that made $250. So literally 2% return on my money. The capital that I put up literally made 2% on my money in 4 days because of this. So it was awesome that I was able to do this when the market went up here. 1, 2, 3, 4. I think it closed out here. So that was a great trade from the options bot. $250. I will take it. Wish it was more, but yeah. Anyway, Dale has a question. Hey, Austin, have you had a chance to look into my request of constructing a butterfly based on the total debit of the whole trade given defined with yes? I don't know if I can show it here. My little to-do board. Anyways, yeah, I know this won't make sense. I don't want to bore you. But yes, it is on my to-do list for this week. I'm working on it right now. I'm finishing up bot archives or archived bots. So that's actually almost done. I'm going to roll it out this afternoon, which means that if you have a bot that's done trades in the past, it's done stuff, but you don't necessarily want to keep running it right now, and you don't want to see it on your dashboard, that's been a request from a lot of people, but you want to keep all the trading history, you want to keep it there, you want to be able to pull it back in the future, you'll be able to archive a bot. And that feature is really almost finished. I just have some testing to do on it. I worked on it all this morning, so that should be released this afternoon. So archived bot was first, but yes, Dale, to be able to. So the question is, guys, what Dale's referring to is a lot of you guys construct trades like, hey, I want to enter a credit spread trade and I want to make sure it's a $5 width, which means the difference between my two strike prices are $5, but I want to collect 30 cents. And so I don't know where those strike prices are going to be. So I shouldn't have to set a delta or something like that. It should know, okay, $5 wide, look through, it's going to take a bit of work for me to program this, but it's going to work. Where you go, okay, cool. $5 wide, what are all the strike prices I can use to create one that's close to a 30-cent credit or a $3 credit or whatever it is you're doing. So yes, Dale, that is on my list for this week. Hopefully I can start it this afternoon and finish it tomorrow, maybe Friday, just because there's a lot of testing that goes into making sure that it picks the right strike prices. There's a lot of tests that I run through. But yes, Dale, on the list, I got you. Also, any other questions, comments, things? I'm also adding, just so you guys are aware, for strike selection, since I'm working on it, another highly requested one is expected move strike selection. You can hit, I'm using too many words. Let me clarify my speech. When you're picking a strike, sometimes you want to go out as far as a 1 standard deviation expected move, meaning you want to look at, based on the day, based on the volatility, what is the expected move of this stock? Is it $5, $10, $15? Whatever it is, based on the volatility, based on the market movement, every single day for each different option expiration, there is a calculated expected move. How much that stock is expected to move plus or minus. And people like playing into those levels. For instance, over 30 days, if an expected move is $15 plus or minus, it means that you can expect that stock over the next 30 days to go up or down by $15 or somewhere in between. And so people like playing, for instance, iron condors, where they place their short put, or I should say, the put credit spread and their call credit spread at those $15 expected moves. And so currently there's no way in the options auto trader to pick strike prices based on expected moves, but that should be in there by the end of this week. So that is something that I'm working on as well with the calculating a whole trade credit. I'm locating that. So yeah. So archive bots will be there later today. I know that's not super popular for a lot of people, but it has been requested multiple times from multiple different people. So it's going to be in there. And then these 2 new strike selections. And so those are just 2 features I wanted to push out because I know I haven't had any new features in a while because I'm working on the new brokers. And that just takes a while and a lot of testing. So before that comes out, they'll be there. Dale says, how about take profit and stop loss at the expected moves? Did not think about that one. But I'll put that on the future feature list, but it should be easier to add once I'm already calculating expected moves. But for this first feature that I have planned for this week, it's just going to be strike selection at expected moves. But yeah, I'll definitely have that to the list down. Good idea. Sweet. All right. Any other questions, thoughts, concerns, market options, bots, anything I can help out with? I think we still have a good crew on here. We still have Trone, Gail, Maria, Robert. Thank you guys so much for tuning in. Love that you guys are here. Again, I always want to do my best to help you guys out.
as best I can. Hope trading is going well. Hope your bots are making money. Should be right now. If not, please message me. Let's go for a call and talk. Someone to help you out. Your bot should be doing great.
Yeah. Thank you guys so much. Glad you guys are here. Sorry about last week. We'll be here tomorrow. Not tomorrow. I will be here if you want to email me or see if a call, whatever. But we'll do the weekly call next Wednesday. Thank you guys so much. Have a great rest of your Wednesday. Great rest of your week. Let's go. Let's make money. See you guys later.